Hey scrappers, if you're looking to figure out what materials you should sell this week or hold this week, now is the time to do it. Our weekly report is going to give you that information, up-to-date market news, pricing. Let's get right into it. We'll talk about it inside. Hey scrappers, Tom here, and today is Wednesday, May 17th, 2023. I am super excited to be back in the office after a few weeks being on the road at conferences. I'm happy to be here, and I'm always happy to be sharing some of the knowledge and the information that I've learned, in the last week, in the last month, or whatever it is. So here we are, beginning of May 2023. 4 months in. We had our 4-month report last week, and unfortunately a lot of the news has not been great. And let's just start with copper. I generally start with copper, but today it's going to be a little more important. About a month ago, we had copper prices trading around $4.17. Today, we've actually had a bit of an uptick of 7 cents, but market is trading at $3.74. So we're still talking about, almost a 50-cent decline. And yesterday, the market ended at $3.67. Now, I've talked to many traders, and they really see the market going to a $3.50 level very close to now. Some predicted this week, actually. So while we did have a bit of a dead cat bounce where we saw some of these prices jumping this morning, overall, I don't think that that's going to be a sustainable price point. I think that we still have about 20 to 25 cents to be able to drop further on the copper side of things. There are a plethora of reasons. I'll get into a few of them, and then you can always read our report and learn about a few more. The U.S. still has a very weak economy, even though we've seen a lot of job openings and low unemployment. We're still going into a very weak period, and there's been things that have been pointing to copper prices decreasing in the short term for the balance of 2023 that really can't be ignored. One thing that I checked out, which is really interesting, was trucking. So about 16, 17 months ago, in the beginning of 2022, for third-party truck drivers, there was an average of 18 loads per truck available. Today, we're at about 4.5 loads per one truck available. What does that mean, and why is that a big deal? When you have a decrease of 70% of the trucking, that means less goods are being moved over the road. You're talking more about goods that are just going to be groceries or essentials opposed to extra products. And that could be new cars, for instance. I read in a report yesterday that said cars are finally being sold under MSRP for the first time in about 2.5 years. A year ago, they were being sold for over $600 above MSRP, and now we have prices below $300 below MSRP. Why is that important for copper and scrap prices? Less metal is needed. More cars are piling up on the lots. And that 2020, 2021, and beginning of 2022 issue where people were ordering their cars, kind of like, putting together an online order for cars like you never thought you would, almost like you're designing, a pair of sunglasses where you get to choose all the different logos and colors and things. You're customizing your cars. That's not happening as often. And that's not just in the regular sector, that's also on the electric side. I read about massive amounts of cars in Tesla's parking lots that are going unsold as people are slowing down their purchases. So that's affecting the trucking. That's affecting the demand for metal, aluminum, copper, brass, steel. Those are affecting things right now. The increased interest rates are affecting people because they're paying more for car loans, mortgages, credit card balances. So what does that mean? Less discretionary spending on more goods, less trucks moving those goods, less scrap needed to make new goods. I was driving to work this morning, and TJ Maxx had their earnings. I think it's their Marshalls. They're all kind of owned by one person. And their earnings were really positive. What they were talking about on the radio was that they are buying massive amounts of inventories from other larger retailers, Target, Walmart, and third-party vendors, even Amazon, and they're selling them at discounted rates at many of their stores because a lot of people aren't paying full price. Maybe a year and a half ago, people were still having COVID stimulus money, extra unemployment benefits. They were having additional money come in, which led to an increased spending, which is why so many companies were reporting record profits. Well, now the interest rates are increased. Now that things are costing more money, from eggs to gasoline, even though gas prices are down compared to a year ago, that craziness of $5 a gallon, they're still up compared to 2, 3 years ago. And that's starting to cause a long-term ripple effect on the scrap prices because there's less demand for things. There's less new building construction. And I'm not talking about houses and condos. I'm talking about big buildings that involve steel. Every time I drive home, there's a huge condo construction project, and I see no steel. I see concrete for the elevators, and I see wood throughout the entire process because they're being used for residences. And resident construction doesn't need much metal. So that's not a good thing if you're seeing more houses and condos going up. Sure, they're going to need some copper, they're going to need some brass, but with the invention of PEX replacing many copper lines, you're going to see less copper going into the facilities. And with a lot of these car manufacturers having their lots filled up, you're going to see less metal needed, and that's just what's happened. And that's a big factor when you group a whole bunch of things together on why copper prices, steel prices, and everything are down. Now, week over week, I'm looking, copper prices are down 6% week over week. Okay, that's not a good thing. I mentioned aluminum prices. And I mentioned inside of the weekly report, there's a link below that you can click on. Aluminum prices are really down, and there's a funny thing going on. The London Metal Exchange tracks and holds millions of pounds of different metals. Half of those aluminum stocks that are in the London Metal Exchange or tracked through the London Metal Exchange are Russian-based materials. Why is that important? Russia has been kind of blacklisted from selling to countries like the United States, the European Union, and others because of the Ukrainian invasion. But when they have over 50% of the aluminum stock originating from Russia, that poses a problem for the London Metal Exchange because they don't know if they can sell it or who they're going to sell it to. What happens if they eliminate the Russian inventory and they say, no, we're not going to hold aluminum ingots from Russia anymore? Well, Russia's probably going to take those and flood the markets through other countries. Could be the Chinese, could be people in South America. Well, if that happens, what's going to happen to scrap aluminum prices? They're going to go down because Russia would rather flood the market with cheaper metals than keeping them in a warehouse that doesn't make them any money. That's going to be a major concern when it comes to aluminum prices. So if you're to ask me for the balance of 2023, if I see an upward trend, there's no positive things that are entering the picture that are going to show that. Now, I do see in Washington, D.C. that they're talking about, the debt ceiling, the debt ceiling, the debt ceiling. They're just hammered into our brains like June 1st is going to come and the world is going to implode. But it looks like a deal is going to be reached. So that may provide temporary relief to the markets. You might see an increase in some prices. You might see a run up in copper prices temporarily. You may see aluminum stabilizing. But overall, that's just a patchwork for a bigger underlying problem that we have. And that is a global recession that is looming, if not in it right now, where you may not be really pinched as hard as you're going to be pinched, but the gas prices hurt, those egg prices hurt, buying new goods and services. I saw the average car, and if I'm wrong on this, I apologize, an average MSRP sales number for cars right now is $48,000 plus. That's completely crazy. That means the average car that's being sold is being sold at $48,000. That's very unrealistic for many people, where a few years ago that number was $38,000. So these are the things where commodity prices going up are really good for scrap, but when things become too expensive, they're forced to drive prices down to get people continuing to sell their old car, sell their old laptop, and these are things that we aren't seeing happening as much. Also, on the technology side of things, people used to trade their phone in every year, every other year. Well, now technology has advanced so much that I don't need to trade my iPhone in. It's probably fine. It's pretty fast. Do I need an extra camera, an extra sharp camera? Many people are saying no to this. So that's taking metals that would be used for more new products and eliminating a little bit of a demand on that side. A small example, but that can really be multiplied across for thousands, millions of people looking to upgrade their devices. So what's that going to do? That's going to affect the lithium prices. So you might start to see the lithium prices going down, which means electric vehicles, electronics, those might go down eventually. But these are just things that we think about and we try to figure out from there. Other markets, stainless steel markets. I've had a couple people asking me what's going on with the stainless prices. Well, this is unfortunately going to be a week of a lot of bad news. There's not a lot of good coming out of this, although on the catalytic converter prices, we'll talk about in a little while, there is some good news. Nickel prices week over week are down 9.3%. Stainless prices are down. We're seeing stainless prices in the 30-cent range, sometimes less in certain areas. That's because nickel prices are down. Again, hate to talk about Russia again, but they're a large producer of nickel. If there's a problem in the nickel markets, you're going to hear about it, and the Russians could flood the markets, and they'll do that on purpose to oversaturate markets, to drive prices low, to hurt developing countries, to hurt countries like the United States, where all of a sudden they have to lower their own commodity prices to match other countries. These are things that we watch out for. I mentioned catalytic converter prices, and there was a little kind of good news in there, and there is. Platinum is up 4% week over week. That's a good piece of news. Palladium is about even, down by 0.5%, and rhodium is down just shy of 6%. So we see platinum up, and platinum and palladium are heavily used in gas catalytic converters. And the good news is a lot of manufacturers are continuing to produce gas engines, but they're putting more of these precious metals into their catalytic converters to offset a lot of the carbon emissions, to capture a lot of the pollution. More precious metals going into catalytic converters means that 5 to 10 years from now, when those cars are coming off the markets, they'll be worth more money. But what that means is they need more platinum. And with a potential worldwide shortage of platinum, another article I read, we may see platinum prices continuing to increase, but we're over $1,000 an ounce for platinum, so that's a good thing. A couple of pieces of other information on the catalytic converter side. A lot of different things are changing throughout the U.S., and I'll compare it to 2006 and 2007 when copper prices went up. When copper prices went up, almost 20 years ago, we saw a slew of more thefts. We saw air conditioners and copper lines being stolen. And what happened? Every one of the U.S. 50 states enacted laws that driver's licenses or U.S. government issued IDs had to be provided at scrapyards. Scrapyards had to track all the different purchases through whatever local laws that were in place. And now it's just matter of fact. I mean, many of you were scrapping in the 1990s and the early 2000s. You would show up, you would give a name, they'd write it down on a receipt, they'd give it to you, they'd give you cash, and you'd be on with your day. Those days are long gone, as many states have even eliminated cash, right? So they've eliminated the need for cash. Some states will only pay you via check or ACH, but now we had the problem with catalytic converter thefts in 2020, 2021, and 2022 when prices went completely bonkers. What happened? People were stealing cats left and right. I read articles, and you can look them up online, about large refiners and large processors buying stolen cats. And now 2 years later, they're getting in trouble. So what happened? Legislators had to step in because they're working for the people, right? And the people that own the cars are being hurt. So now we're starting to see new rules implemented. And don't be surprised, this is happening in dozens of states across the U.S., whether legislation has been approved and signed into law or is pending to be approved and then signed into law. All 50 states are going to have this happen. You're going to have to start having VIN numbers going along with catalytic converter sales, receipts for repairs, copies of titles. These are things that lawmakers are going to force individuals to do to be able to sell those to good catalytic converter buyers like the team over at rrcats.com. So we look at all these things, and while there's additional steps that need to be taken, it's just to ensure that the people that tarnish our industry and make our scrapper name bad are punished ultimately, and the good people doing good business are rewarded for doing that business. So just a heads up on that. But overall, catalytic converter price is around $115 per OEM catalytic converter on average. The team over rrcats.com provides 10-day price locks along with free shipping on all OEM catalytic converters. And during the month of May, if you send 2+ OEM catalytic converters in, you'll be qualified to get a free t-shirt and just get a little more swag from rrcats.com. What else is going on? Lead acid battery prices continuing to kind of stay steady. We're seeing those prices reported in the 14 to 18 cent range. I've seen some people talking and asking about us to go into those. Lead has not been heavily integrated in a lot of new technology, cars or things like that, as they move away from lead acid batteries and combustible gas engines and towards electric vehicles. Less lead is needed, and lead is so heavy they don't want lead inside of cars, right? So there hasn't been a real new demand for those popping up. So those battery prices should continue to be a little more depressed moving into the next few months. Lead prices have been relatively steady. Soft lead, 55, 60 cents. We've seen as low as 40 cents reported. And don't forget, going to iScrapApp.com or on the app on your iPhone or Droid allows you to report your prices as well as checking national averages and things like that. We finally have our new updates coming. It's been a little bit of a delay, but that's going to come out in the next few weeks, May and June 2023. And we'll keep you posted on how to learn more about those scrap markets. Yellow brass prices have been reported in the $1.80 to $2 range. Strong numbers still. You know, while I recommend holding brass this week and holding most of your grades of copper, you know, selling it is never a bad thing if you need the money. But if you are waiting to see how the market shapes out, the next couple of weeks going to this debt ceiling could actually give a short-term boost to copper prices. But long-term, I'm a little bearish for the summer and the fall on copper markets. That's why I kind of put a hold on there. But again, you know, do what you want and share what you're doing with us. This way we have an idea, you know, below in the comments. Other than that, we've seen gold prices down, still around $2,000 an ounce. You know, they've kind of been a safe bellwether for some of the markets right now. People are putting more money into gold. We see people putting less money into the stock market and more money into CDs because interest rates are up. You know, kind of the safe bet versus the gamble. And commodities and stock market, those are gambles. They could be calculated and you can make money. But again, pay attention to these things, and by tuning in every week, we'll give you some of our knowledge to help you learn more about what's going on with the markets. Scrappers, my name is Tom, and today is May 17th, 2023. I look forward to hearing about your comments and your questions. We have more videos coming out in the coming days and weeks. Let us know if there's something that you want us to talk about. And until next week, I'll scrap you later.
Thanks for checking out this scrap video. For more exclusive scrap video content, please become a YouTube member of our channel today. Thank you, and I'll scrap you later.